Economics is often seen as a notoriously complicated subject, but understanding modern economic history and the rise of the capitalist system is actually quite easy. All you really need to know in order to understand modern economic history is to understand a single word: growth. The most unique and important characteristic of the modern capitalist economy is that it is growing all the time. Every year we produce more than last year, and we have more goods and more money and more everything. To understand how the modern economy grows at such an astounding rate, let's begin with a simple example. Suppose you want to open a new business. Say you want to open a new bakery, and you don't have the money. What do? What you do is you go to the bank and ask the bank for a loan. Now, how come the bank has money to give you? Because people put their earnings into the bank. Let's say that in your city there is a big contractor who has just finished a big project, say building an Italian restaurant, and he earned $1 million, so he takes this $1 million and puts them in the bank, in his account, and the bank now has $1 million, right? So, as you go to the bank and you tell the banker about your dream of opening a bakery, the bank has money to give you. You present your business plan to the banker, explain all the bakeries that you want to do and how much money it will make, explain to the banker that you don't have money at present, so you need a loan from the bank, and if the banker is convinced by what you tell her, then she can take the $1 million she has and loan them to you, so you can build your bakery. You now have $1 million, you're very happy, and you go and you hire the same big contractor to build your bakery. When you pay the contractor, say the contractor demands $1 million, when you pay this $1 million to the contractor, he now goes and deposits this money also in his bank account. Now a simple question: how much money does the contractor have now in his bank account? The answer is simple: $2 million. The $1 million from before, from the Italian restaurant, and the $1 million from you that you now paid him to build your bakery. So the account of the contractor has $2 million in it. But how much money, cash, is there actually in the bank? There is only $1 million. Because the previous $1 million, the bank loaned it to you, and this is the $1 million that you gave the contractor. Now it becomes more strange. Let's assume that 2 months after beginning to build your bakery, the contractor comes to you and tells you that there are all kinds of unforeseen problems and expenses, and the cost of building your bakery is not $1 million, it's $2 million. You're obviously not happy with that, but what can you do? You go back to the bank, you explain what happens, and if you're lucky, you get another $1 million from the bank, and you transfer this money to the contractor. Now, another simple question: how much money does the contractor have in his bank account now? He's got $3 million now. But how much money is there actually in the bank? There is still just $1 million. In fact, it's the same $1 million that's been there all along. According to current US banking law, the bank can repeat this exercise 7 more times. It can 7 more times loan you $1 million, so that eventually the contractor would have $10 million in his account, when in fact the bank has only $1 million in its safe. Banks are allowed to loan $10 for every dollar that they actually possess. If you go to the bank and put the $1, the bank is allowed to loan other people $10. But this means, this is very important to understand, more than 90% of the money in all the bank accounts today in the world is not covered by anything. There is nothing there. If all the account holders at your bank, say Barclays Bank, if all the account holders at Barclays Bank will come to the bank and say, give us our money, I want the money that's in my account, the bank will immediately collapse, because the bank doesn't have all the money. And the same is true not only of Barclays, but also of Deutsche Bank and Citibank and Lloyds and all the other banks in the world. None of them have in their possession the money that appears in the bank accounts. This may sound to you like a giant fraud. But if this is fraud, then the entire modern capitalist economy is a fraud. Now, some people say it is, but the fact is that it's not a fraud. It's been working in an amazing way for hundreds of years. It's a tribute to the amazing abilities of the human imagination. What enables banks and the entire capitalist economy to survive and to flourish is our trust in the future. What covers almost all the money in the world is our trust in the future. The bank loaned you the missing money, trusting that one day your bakery will be built and will be profitable. The bakery hasn't baked yet a single loaf of bread or a single cake, but you and the banker who gave you the loan, you think that a year from now the bakery will be selling thousands of bread loaves and cakes and cookies every day and will make a lot of money. Then, in the future, in this imaginary future, you will be able to repay the loan that you took from the bank along with the interest, and the bank will then be able to give the contractor all the money in his account if the contractor will demand it. The entire enterprise, the entire economy is thus based on our trust in an imaginary future. This is how the capitalist economy functions, by trusting the future. And this is why it grows so rapidly. The secret, the magic of capitalism is that it finances present expenses with make-believe money that has no cover in the present and may have cover in the future. This is why it is able to grow so fast. Without a bakery, you can't bake cakes. Without cakes, you can't make money. Without money, you can't pay the builder. And without a builder, there is no bakery. So what can you do? Humankind was trapped in this vicious circle for thousands of years, and this meant that economic growth was very slow and very limited. It was very hard to start new businesses or to expand existing businesses. The way out of the trap was discovered only in the modern era, with the appearance of a new system, the capitalist system, which is based on credit. Money before the modern age was based on trust in things that exist in the present. For example, you trust in the power of the king at present, and therefore you trust his coins. Credit, on the other hand, is much more sophisticated than just any kind of money. Credit is money which is based on trust in the future, in things that don't exist at all anywhere in the present, but may exist someday in the future. If credit is such a wonderful thing, how come nobody thought of it earlier? Well, of course they did. People have been loaning money to one another for thousands of years. We have written evidence of loans from ancient Sumer 5,000 years ago. The problem in previous era was not that nobody could imagine what credit is. The problem was that people did not want to extend much credit because they didn't trust that the future would be better than the present. People in traditional societies did not believe in progress. They tended to assume that things were better in the past and the future will be worse than today, or at best that the future will be just like the present. To put this in economic terms, people believed that the total amount of wealth in the world is limited, is stable, if not dwindling, less and less wealth. People therefore considered it a bad bet to assume that they personally, or their kingdom, or the entire world would be producing more wealth 10 years from now. Of course, the profits of a particular bakery might rise, but only at the expense of another bakery. One city might flourish, but only if another city became poor, impoverished. The King of England might enrich himself, but only by robbing the King of France. The idea was that the economic pie of the world is of a given size. You could cut this economic pie in many different ways, but it never got any bigger. That's why many cultures concluded that making a lot of money and being rich was sinful, was bad. Jesus in the New Testament said that it is easier for a camel to pass through the eye of a needle than for a rich man to enter into the kingdom of God. And many people still today don't really understand how capitalism works, and they still think that the economic pie is static. And if I have a bigger part of the pie, it must be because I took a slice from somebody else. And indeed, if the economic pie stays the same size, then you cannot really enrich yourself except by robbing other people. And it also means that there is little reason to extend much credit to people. This is why in the pre-modern, pre-capitalist world, it was very hard to get loans. And if you did manage to get a loan, loans were usually small, they were short-termed, and they were subject to high interest rates. You got only small sums, you had to repay them quite quickly in a few months, and you had to pay exorbitant rates of interest. Because there were very few new businesses, the economy indeed did not grow. Because the economy did not grow, the trust in the future remained small, and people didn't want to extend much credit. And this is how the expectation of stagnation fulfilled itself, because people did not believe that the economy will grow. Indeed, the economy didn't grow.